they're no longer going to need you financially, hopefully, anymore. How you're no longer going to be focused on them. Who will be your major focus then?
Myself.
Exactly. And by that time, your kids will be older, but shouldn't the debt and mortgage be paid off, if not almost paid off?
Yes.
And if you're going to retire, what do you need a lot of?
Money.
So with compound interest, your assets should have grown by now, right?
Right.
And once we get to the point where we have all the assets here, if God forbid you passed away, who would still get your money?
My kids.
Exactly. So at that point, do you really still need to be paying for a life insurance policy when you have all the money saved up?
No.
Right. Think about Bill Gates. Does he really need life insurance?
No.
Right. Now, doesn't it make sense to invest for our life insurance to protect our family in the short term, just for a period of time until we can grow our assets and become self-insured?
Yes.
Mhm. Now, if something happened to your car, you would want to replace all of it, right?
Yes.
If something happened to your home, you would want to also replace all of that too, right?
Yes.
But if something happened to you, how much of your income would you want your family to have?
All of it.
All of it. So since we'll be replacing all your income, how much do you feel you could comfortably put towards this on a monthly basis to make sure your family of three is properly protected? And before you answer, I'll give you a couple ranges. About 50 to 100 a month, 100 to 150 a month, or 150 or more a month.
100 to 200.
100 to
So go
200.
back to the slides. Go back to the slides. I don't want to, again, I know, so go back to the first slide that we went through. So I think this is a good idea what she's doing. She has two different screens and one she's reading off of, because it definitely is a lot. But I know for a fact that 99% of you, including myself, are not using this. But this is why we're getting the objections that we're getting. I get calls all the time. The client said, oh, but do I get the money back? The client, is asking if they can borrow against it. The client's going to say, what happens after this, after my term ends? It's because you're not asking the questions, right? So if you go back here, go not to the beginning, to the second part where you start, right? See, and Jen took this from old presentations that Shaq and I had developed, and then, or whoever made this slideshow, and it's all, just pieces of it, but it's arranged in a very nice chronological order, right? So go back to the first slide here. Next, on a monthly bit, next. Okay, here. 15 to 30 years from now, what will be your major focus? And as I talk about this, remember something. There is the words, but then there's the words behind the words. There's the meaning behind the words. So you can have a separate screen and you can be asking this question, but do you understand why we're asking it? 15 to 30 years from now, why did we choose 15 to 30? Because they're probably getting a term insurance policy between 15 and 30 years. What will be your major focus? Get them to think about that. Ask. People don't think, they're not forward thinkers. They're just thinking about today, right? What will be the major? But if you're talking to a 30-year-old or a 35-year-old, in 30 years, they're 65. Think about it, Mr. Client. What's your major focus at 65? Because how old will your kids be? They're 8 and 10 right now. They're going to be 38 and 40. So in 15 to 30 years, what is going to be your major focus? If they say it's going to be myself, my retirement, then you have won them over on why term insurance works. Because life insurance is a temporary need. If you don't make them understand that who they will be in the future, what their concerns are going to be at that age, they're going to want a policy that lasts forever, which is not smart, okay? Should the debt and mortgage be paid off? Get them to say it, right? If they own a home, how many years left are on your home? It can't be more than 30, right? That's the longest mortgage typically that's out there. Let's go next. If you are going to retire, what do you need to have a lot of? This is a great question that I used to ask, and they're going to say, I need to have a lot of money. Why are we asking this? Because it's proving to the client that even when their term insurance expires, they're going to have a lot of money. Because, Mr. Client, do you plan on retiring? Yes. Okay. At what age? At 65. Well, if you're going to retire, what do you need a lot of? You don't retire because you reach an age, right? You retire because you reach an amount. Retirement is not an age, it's an amount. So if you want to retire by 65, what do you have to have a lot of? Get them to say money. Now they are admitting two things. They're admitting my focus is going to be myself. Sheila, we'll send it out to you. The focus is going to be myself, right? And I'm also admitting that I'm going to have a lot of money at that time. So why would I need a whole life now? We've already admitted, right? I'm not worried about how much I'm going to leave others. I'm worried about whether I can survive in retirement. And I'm also admitting that if I want to retire, I'll probably have a significant amount of assets. So with compound interest, your assets should have grown by now, right? Right? So again, they're admitting they will have substantial assets once they get there. Once we get to the point to where we have all blah, 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 if God forbid you pass away, who would get this money? Okay. This question, they may not understand it. As I'm reading this, I don't think everyone will get it right away. But once we get to this point where we have all these assets, we're talking about in the future, right? In 30 years, you have all these assets, and then you pass away. Even if you don't have insurance, who is going to get all of those assets that you've accumulated? This paid off home, this $1.5 million retirement account, that other real estate investment property that you had. Who's going to get all that, right? They're going to say, my family's going to get it. So at this point, do you still need to be paying for life insurance? No. So now they're admitting it's not that my family's going to get nothing. They're going to get all the assets that I've worked so hard to accumulate, and I don't need to pay for life insurance because they're going to get these other assets. So I think it's important that, we're doing what we're doing right now, which is going through the psychology of why we ask the questions. So you're not just like drilling the client with questions and you have no idea why you're asking. We're getting them to move away from thinking that life insurance solves all problems, that they're going to have it for their whole life, that when they're 90 years old, they're going to leave all this money to their family. We're getting them to move away from that. So doesn't it make sense to invest for our life insurance to protect our family just for a period of time until we can grow our assets and become self-insured? Okay. So I think you were probably going to go over this slide before you asked that question. Go ahead.
Yep. So once I ask this question and they agree that it makes sense, if something happened to your car, Samir, you would want to replace all of it, right?
Yeah.
If something happened to you, your home, you would also want to replace all of that too, right?
Yes.
But if something happened to you, how much of your income would you want your family to have?
All of it.
So since we're replacing all of your income, how much do you feel you could comfortably put towards this on a monthly basis to make sure your family is properly protected? Now, let me just give you a couple ranges before you answer. So just side note, guys, when I'm dealing with a single parent, I actually give smaller increments than, and I'll also, when they're married, I don't really give the 50 to 100. I give 50 to 75, 75 to 100, 100 to 150, depending on who I'm dealing with. So if they're like a 6-figure earning couple, I'll do the ranges that you see here on the slideshow. But if they're a single parent and I know they just work at, they're managers at Wendy's or something, or they work at UPS, I might give them a smaller increments. Does that make sense, Samir?
It does. So when you are giving the ranges, are you drawing it out somewhere?
Yes, on the whiteboard.
Yeah.
Mm-hmm. So how much per month could you comfortably put towards this to make sure your family is properly protected, Samir? About 50 to 75, 75 to 100, or 100 or more a month to protect your whole family of 3?
75 to 100.
Okay. So if I could put together a plan that fits between $75 to $100 a month of a range, that would feel comfortable for you?
Yes.
Perfect. So I'm going to crunch some numbers, but in order for me to be able to accurately get a quote for you, calculate a quote, I need your date of birth first. What's your date of birth?
4/30/82.
Okay. And then I'm going to ask these questions here that you guys see on my screen. So I just go through this pre-qualifying questions so that I can figure out if this is going to be an app that's going to come in with a good faith deposit, meaning premium, or if I'm going to have to collect an app without premium attached to it because there's health conditions that I didn't know about. So have you ever had trouble qualifying for life insurance before, Samir?
No.
Okay. Do you have any significant history like cancer, heart diseases, etc.?
No.
Any tobacco use in the past 5 years at all or 12 months?
No.
Any medications you take for high blood pressure, cholesterol, diabetes, anxiety, mental nervous disorders, or anything else in the last 10 years?
No.
Do you have 2 or more speeding, moving violations or DUIs in the last 3 years?
No.
Any parents that passed away before 65 years old, specifically due to cardiovascular illness or cancer?
No.
Do you do any dangerous activities like flying an airplane as a pilot, scuba diving, hang gliding, anything like that?
No.
Okay. And what's your height and weight?
197.
Okay. 6 foot and
Even,
6
yeah.
feet and 197 pounds.
Yeah.
Okay, great. I'm going to crunch these numbers for you, but let me ask you, did you feel comfortable with the way that I presented myself so far?
Yes.
Awesome. Did you feel like I answered all your questions regardless of whether or not I asked them?
Yes.
And do you feel like you learned a lot of value for yourself that other parents need to know about?
Yes.
Awesome. The reason why I asked is while I'm crunching these numbers, I'm going to have Joey work with you here. My biggest responsibility is for Joey to have other places to go. And I typically ask for introductions for her to 5 to 10 other families like yourself that you feel deserve to hear the same education. Now, just because you feel they deserve it, Samir, doesn't mean they'll want to actually meet with her. But I do have to teach Joey how to make that call. We don't want to reach out to them yet until they are expecting our call. But if they text you back and say, Samir, I don't want to talk to any 4'11" Asian lady, I promise you we'll cross them off the list, okay? They're not going to get a call from us if they really don't want to call, but that's just to introduce Joey and see how open they are. And they're adults, so they can make their own decisions, right?
Yes.
So I'm going to have Joey ask those questions really quick, and then let me crunch these numbers. So while Joey's asking the referral questions, side note, while Joey's asking for the referral questions, I let her know already I need at least 5 minutes to do these quotes. Because what I'm doing is on my phone that's sitting in front of me to the side, I'm running the quotes or the laptop next to me. And I'm pulling up a Google Doc so it looks professional. And I'm setting this up where it looks kind of like this. So once Joey's done with the referrals, I'm already done with the quotes. I have a triplicate of choice going from top to bottom, split between husband and wife if it's a husband and wife situation, or like this. Sorry, this is replacement of a policy. Let me find a.
Jen, how did you make this so fast? What do you do?
So this is the Google Docs app. It's the blue docs that you see here. And at the very bottom right, there's a plus sign. If you click on the plus sign, it says new document, and it will open up this. So if I say quotes, Samir Qureshi. And it took me a minute to kind of learn how to do this quickly, but I had to make sure. So commitment, 75 to 100 a month. And then based on his age, I'll do 30-year level, waiver premium. At the top right, there's a plus sign. And you can add a table, right? So if I add a table of 3 columns, 3 rows, it pops this out. And all I got to do is just fill in the quotes and then total it up. So let's call it, $101 or whatnot. And then fill out the rest of the quotes. And at the bottom, I purposely say qualify for coverage first, then start a Roth IRA for retirement. And I'll make sure that this is blue because blue is a color of I want to move forward with doing business with you psychologically.
Good.
And yeah, so that's what I do. I put the commitment up front. That way they see that everything is pretty much in their range. And then I'll show the quotes. Any questions before I move forward?
No, but I think that this is really important because it is a presentation that's designed to do over Zoom. When I used to go meet with people face to face, which I try to do rarely now, but when I when I did do that, I was very good with my pen and pad. And I think that this is an awesome substitute for that. And by the way, you know, for a bigger and better client, because I am a client myself in other businesses, right? And I'm a good client for other businesses. And these are things that I look for. If someone did this presentation with me, what it tells me is that they do a lot of presentations, they know how to present, and they've closed a lot of business probably. It's so smooth. She knows where everything is. She does it so quickly. Now, everyone has to be bad before they're good. Everyone is going to be fumbling around before they figure out how to do it like her. But I'll tell you something, man. I know people, they're inept when it comes to stuff like this, but man, they're good on Facebook and Instagram, right? See, we all choose to be educated in some areas and uneducated in others. So if you don't know how to do this stuff, or you're not trying to learn how to do it exactly the way that Jen is presenting it, that's your choice. You know, like if you look at my social media, I never post. And the last post that I have on one of them, I thought I was doing like a story, and then it just became like a regular post. And I was like, dude, I don't even know how to post a story on Instagram, but I know how to do a lot of other things that are actually useful in my business, in my life, and to my income. You know what I mean? And so all of that is just excuses. If you want to learn something, you can learn it. And this is the professional 2021 way to do an appointment on Zoom. A lot of people were wondering, you know, how can you replace being in front of someone and doing something on Zoom? This is the most effective way that I have seen. And I'm not saying other people aren't doing this. You're just the one that happens to be presenting, and it's awesome. Everyone should be watching this video, going back. And by the way, videos like this, when I was in the business, I would spend hours going through word for word everything that was said in the videos, right? Everything. And back then it wasn't even videos, it was audios. We used to get a recording of the Fast Start School or of a meeting or someone coming to our office, and I'd hit pause, rewind, every single word. I still have all those notes today. And everything that I say and do is an accumulation of all the different things that, you know, all these meetings that I've transcribed into my notes, all the meetings that I've attended and things that I've copied, and you know, it's just awesome. So are we, Jen, what is the next step, or is that basically it?
So that was the last of my pretty much presenting before I go into collecting premium and, you know, seeing if there's any funny money going on, right? So let's say, where did I just stop? Okay, so let's say we got the referrals and we're all done. Joey's done with the referrals. And I go, Samir, great. Thank you so much for introducing them to us. I have a couple numbers for you to look at. Oh, shoot, I deleted it. Sorry, Samir. Let's just pretend these are your numbers, okay?
Sure.
So your commitment was $75 to $100 a month. So these are each 30-year level quotes with a waiver premium, which means that if you get disabled, Samir, for 6 months or longer, we will refund those premiums back to you, and we will cover you until you're back on your feet, even if you can't pay us, okay? Now, for the first quote, you have $100,000 covering you and $5,000 each child, and that's $80.10 a month. If you wanted to go a little bit lower, $85,000 on you, $5,000 each child would be $69.65 a month. But $60,000, the bare minimum I do feel comfortable with you having. That's $5,000 each child as well. That's $52.21 a month for the whole family. We do want to qualify for coverage first, and then start a Roth IRA for retirement. But as far as the quotes for protecting your income, which would be most comfortable for you?
$80.
Okay, that's fine. So are you familiar with how the process of qualification works at all?
No.
Okay. So unfortunately, life insurance is not something that we can just buy. We have to qualify medically for it. Just like if we want $1 million loan, they're not just going to give it to you, will they?
No.
Right. So we don't check your credit, but we do check your health. So our process takes about 4 weeks to 6 weeks. And we start by first taking a 5-minute application. with a good faith deposit equal to the first month's premium. So in your case, it'll be the $80.10. Now that doesn't come out immediately today, but it will come out the next 2 to 3 days. And our office manager, Xiomara, will give you a call to see how I did with you and Joey did. Hopefully we get 5 stars. And she'll just confirm that you knew what you applied for. The company may call you to ask you the same medical questions. It's called tele-underwriting. And then the underwriting department, they will decide whether or not they want to issue the policy. If they do issue the policy, Samir, then we are happy and we can make any changes where we can decide to go up, change draft dates, go down, stay where we are. I know you need time to think about those changes, but it's 4 to 6 weeks enough time for you to think about it while we can see if we can get you medically qualified.
Yes.
Awesome. I just need you to grab your ID for me while I screen share the application. Let me know when you have it in front of you. And then I just go into applying.
Oh, so you want to do that right now? You want me to do an application right now?
Well, from what I understand, this was something that was important for you, and you said that this was something that was in your budget, right?
Yeah.
Yes. So what reservations do you have? Because it sounds like you might, get kind of step back a little bit. I'm sorry if I moved too quick.
Yeah, I didn't know that I was gonna have to pay something today.
So let me just reiterate, because maybe I did speak too soon. When we do an application, it's to see if you can qualify. We don't know if you can qualify. And this $80.10, that's something that is just what we call good faith deposit, which means it covers you during the qualification period while we can see if we can say yes to you or not. Now, worst case scenario, which we hope is not, if you do get declined, you do get that back. So you're technically not paying anything because we are making sure that we can at least cover you during the qualification period. At the end of the day, after the 4 weeks to 6 weeks, once and if the company issues a policy, that's when you actually have a document that you and I can read together, and you can decide what you want to do then. Does that make sense?
Yeah.
Yeah. And at the end of the day, right now, you don't have coverage at all. And we already agreed that you're not a man that would like to depend on somebody else that controls the income protection for your family. You'd rather have that under your control, right?
Of course.
Yes. So if you were to think about anything, would you rather think about it with some temporary coverage at least, or conditional coverage at least, or no coverage at all?
With coverage.
Right. So let's just see if we can get you approved, and then we can worry about any changes you want to make. At the end of the day, again, it's still not a final decision you're making. Does that sound fair?
Yeah, that's fair.
Perfect. So then I'll take the application. Xiomara will call, and we'll deal with it as we deal with it. I'm still going to set up a carryback. Most single men that I find, they're going to lock in a lot more with the investment carryback. So that I'm going to still set up the carryback regardless of the demographic that I'm working with, because I want to lock the client in. But a lot of the single dads, I find they want to talk more about the investment side because they don't think they're going to die tomorrow or anything like that.
Yeah, good.